asking yourself the question, how are they going to make it work? That is for you and I to sit back and see. What we do know, next year, at a time like this, hopefully we shall be together again. We shall be having 5 more. Actually, maybe 7, if you exclude the credit bank and bio yogurt. That the president did say that they're already on the last mile in terms of getting the approval to come to the Nairobi Security Exchange in whatever form. So probably that is not what was not clear, because we do know we have the emerging market segment, we have the GEM segment and the MIM segment on the NIC. So you're sort of thinking they might say that, but then you hear, yes, they're backing it, so let's onboard them. For us, is to wait and give you those news. As we start today, we do know that China is fining Kenya an approximate of 1.3 billion in terms of defaulted SGR loans. But again, we anticipated it. It is going on. Again, that's something that we're going to watch towards the end of the year and then relay that info to you. Today, we do have Kevin Karobia, senior investment analyst at Saiton, who's with us for the entire of this. We're going to look at the markets together as we ask the question, have we reacted to the impending new look markets? I'll be talking to him shortly then once we get into our markets outlook. For now, let's cross into the newsroom and see exactly what it is that we have for you as the biggest business headlines as we start Look at Business today. My name is Simba Kiage. Documents by Treasury indicate that Chinese banks fined Kenya 1.3 billion shillings for defaulted standard gauge railway SGR for the year ended 2021. Kenya obtained over $500 billion shillings from Chinese lenders led by Export-Import Bank of China to fund the construction of the SGR from Mombasa to Naivasha. Even as the Kenyan taxpayers continue to shoulder the burden of SGR as revenues continue to remain unsustainable, China is not giving the government any breathing space. A 1.32 billion shillings fine for the financial year ended June 2021 has been factored on the top of the payments that the country is making on the loans. Passenger and cargo services in the year to June 2021 touched 15 billion shillings, an amount not enough to fully support payment as running costs for SGR at slightly over 12 billion shillings annually. The latest fine is on the rate of 1% interest of the due amount, according to the disclosure documents seen by people close to the cash office. During the period under review, SGR posted an operation loss of 3.4 billion and paid back 22.7 billion in loan repayments. The sources indicate that the defaults came on the back of the period when Kenya was trying to negotiate moratoriums from its bilateral lenders, including China, by another 6 months to December 2021, saving it from committing billions to the Beijing lenders, a move that faced opposition from China, especially the Exim Bank of China that later delayed releasing of funds for other Kenyan projects in protest. China postponed the repayments in January last year, helping Kenya temporarily retain a 27 billion shillings that was due for 6 months ending June 2021. The opposition from the Chinese lenders forced Nairobi to drop its push for extension of the debt repayment holiday to avoid straining relations with Kenya's biggest bilateral creditor. China, which accounted for about 1/3 of Kenya's 2021-2022 external debt, is the biggest foreign creditor after the World Bank. Kenya spent a total of 117.7 billion shillings on Chinese debt in the period, of which 24.7 billion shillings is an interest payment and almost 93 billion in redemptions, according to budget documents. Repayment of the SGR loan started in January 2020 after the lapse of the 5-year grace period that Beijing had given Kenya after the completion of the SGR project. The current fine further exposes Kenya's struggles in servicing of public debt, which is projected to jump by a third, a record 1.39 trillion in the fiscal year to June 2023, more than half of the projected state revenue. Kenya spent almost 57% of tax income in the first financial year repaying loans, according to Treasury, underlining the effects of the mounting public debt on state finances. For Lookupbusiness Simba, Kiage. A report by PwC indicates that internet advertising revenue in Kenya surpassed television advertising for the first time in 2021, touching $144 million compared to the $98 million that television advertising attracted. The report projects that internet advertising revenue would be 4 times TV revenue by 2026. According to a new report by PwC, digital advertising is the king in the media and entertainment industry as companies slash budgets, follow audiences online and pick lessons from the COVID-19 pandemic. The entertainment and media industry report by PricewaterhouseCoopers shows that the internet advertising is projected to account for 79.9% of the industry's total revenue by 2026 in Kenya, Nigeria and South Africa. Nigeria already saw internet advertising rule revenue charts as early as 2019. The report indicates that in Kenya, the continued rapid internet penetration will mean that by 2026, this segment will be just $1.2 million behind the traditional TV and home video, paving way for internet advertising to take over the sector. The report indicates that there were 23.35 million internet users in Kenya in January 2022, putting the country's internet penetration at 42% as of May this year. The report points to the lessons that businesses in the country picked from the COVID-19 pandemic, adding that industries that felt the brunt of the pandemic in 2020, such as cinema, live music and business-to-business trade shows, made strong comebacks, although revenues remained below pre-pandemic levels. However, segments such as video games and OTT streaming TV video rose to new heights, benefiting heavily from the lockdown conditions, jumping by 12.6% in revenue growth. Analysts expect future E&M growth to be seen in the development of the metaverse and use of non-fungible tokens, NFTs. For instance, Meta stated that the metaverse could contribute around $40 billion to the economies such as sub-Saharan markets like Nigeria and Kenya. For Lookupbusiness Simba, Kiage. Moving on, the Privatization Commission is in line to approve 10 parastatals that are set to be privatized and later listed at the Nairobi Securities Exchange, as promised by President William Ruto during the bell-ringing ceremony at the Nairobi Securities Exchange. We take a look at some of the major realignments in the corporate sector as the impending privatization looms.
President William Ruto's call to use the capital market as a wealth and capital generator for the economy will see companies run by the government privatized. This is in his bid to cut the expenditure by 300 billion shillings as a substitute for the loans that have crippled the economy. His announcement that 10 parastatals will be privatized for purposes of listing has brought a queue of parastatals to the fore. The list, according to the president's announcement, will contain top-performing government-run agencies that will join BioYogurt and Credit Bank that have been given approvals for listing.
We stand on the cusp of an opportunity to renew the relationship between Kenyans of all walks of life with the Nairobi Securities Exchange and to reaffirm the place of the capital markets in igniting and sustaining unprecedented national development and socio-economic transformation.
Have been approved for sale by the Privatization Commission. The companies include Kenya Meat Commission, Kenya Pipeline Company, Kenya Ports Authority, New KCC, Development Bank of Kenya, Numerical Machining Complex, Isolated Power Stations, and Kenya Tourism Development. The list will, however, set stage for tough realignments in the economy, especially after President Uhuru Kenyatta made unprecedented calls to save some of the corporations on the list. The Kenya Defence Forces had already written to the Privatization Commission disputing the approval for sale of the Kenya Meat Commission after former President Uhuru Kenyatta put the meat processor under the forces for mismanagement. This follows KDF's plan to inject cash to the ailing meat plant after the Treasury allocated 4 billion shillings in the supplementary budget. A cash injection drive meant to dry soon if Ruto will stick to his word of cutting down expenditure by 300 billion shillings. Another twist waiting the privatization are the rumors surrounding the Kenya Ports Authority KP. KP was rumored to have been used as a collateral for the Chinese debts and was to be auctioned if the country defaulted the heavy Chinese loans that are taking toll on Kenya's economy.
For now, the capital markets will go through a necessary shake after witnessing Safaricom being the last IPO more than a decade ago and 2015 being the last time a listing happened on the NSE. Edwin John Mokora, Lookupbusiness.
Fantastic from Edwin John Mukora. Now, the Council of Governors have said that the contractors owed billions by the county government will have to wait long to receive their payments. This comes on the back of a directive for the county bosses to prioritize pending bills as they settle in office.
Kwa hivyo tuna imani ya kwamba tukiendelea na uhusiano ambao tuko nao na serikali ambao ni wa kuongea wa negotiation, counties zitapata pesa zile zilizo zetu, kwa sababu pesa zimekaa kwa national government, ndio kwa sababu hatuna ile percentage inatakikana, lakini functions zikikuja, kwa sababu functions zinakuja na pesa, hiyo itakuwa pia tumefikisha ile kiwango ambacho county governments zinataka.
Some counties here, they are pending bills close to 5-6 billion. And the requirement from the treasury is that you should pay the pending bills first, which cannot, it cannot be untenable. You pay, you cannot run any, including even paying salaries of the current employees of the county. That's a big issue that we're trying to see if we can sort out. Therefore, development funds all go into paying salaries, which are an issue that we are addressing. We see how best we can be able to cap it. But
for example, as we talk now, we've not paid salaries to staff for the month of September. And so we've been able to caucus around and almost reach a conclusion that going forward, the national government and treasury will be able to really send money on time to the counties. We've also questioned on the need of automating how money comes to the county governments. As it is now, the treasury from the county, that is the CC for finance and his team, are the ones to travel all the way to Nairobi from different counties to take some funny letter to the controller of budget for money to be released. And we are saying that one is not happening in national government ministries. Why should it be happening in county governments?
Production farms in Kilifi County have decried the high taxation rates by the government, which they say are hindering their production. Speaking at Marereni, Consult's manager in charge of production and civil works maintenance, Gilbert Mwinga, has said the company has been forced to dig deeper to meet production costs. The company currently employs 150 workers on permanent job basis and between 500 and 600 casual workers. Let's take a look.
Some other government departments are demanding so much taxes, like water resource management or these people. They're demanding so much taxes that if you put it into our cost of production, it will make this salt more expensive. It will mean it will be more. It will not be able to meet the common man. They're able to buy it. So some of the other people, they don't understand the problems that we're facing. And you see, salt production depends on weather. Weather, we normally have weather that is almost going to favor us, like droughts. But normally when we have rain season, we find it very difficult to meet the demand.
All right, we take a tiny little break, actually a breather right now. But once I come back, I'll be with Kevin Karobia, who's a senior investment analyst at Saiton, so that, as promised, we can look at the markets and see if anything is worth talking about. Before then, we get to dig deeper into the new look capital markets, just about right now. Great. All right. Now, remember, it's been almost 2 hours of trading at NSE. So we're just going to go back and see exactly how trading opened this morning. And straight away with Kevin this morning, we're going to jump into what were the biggest gainers. And indeed, from that list, we can actually get to see some of them that are coming to you right now. And Kevin, you got to talk to me about NBV. I mean, since they announced that they had gotten into the main investment market segment at NSE, we've been seeing them rally. Do we expect them to cross into the 5 shilling mark that they got into back in 2020?
Yes, Elijah, looking at it in terms of being able to cross into the MEMS, which is the main investment market segment.
Yes.
That's a boost in terms of investor confidence, because now it gives the notion that NBV is now going into what we can call a mature company, and it's slowly maturing over time.
Yes.
And this can only be an indicator of continued investor confidence, and with investor confidence, we are sure that the price will continue to rally. We've seen that in the last, or even what you have on your screens, almost beating the 10% cap by the NSE on a day-to-day, 10% movement in share price.
Yes.
So looking at it long term, positive that we'll be able to cross that 5 shilling mark in the near future.
Pretty much. I'm going to talk to you about another one from that particular list as well. And I want us to look at that list again. If you have NCBA there as well. Kevin, with NCBA, it's a bit, when you look at it, you sort of look at it from a hot and cold situation, because we know the healthy position for NCBA should be about 33 shillings. But for the entire of last week up to now, we've been seeing them coming into the top gainers list and in the top losers list. What is happening at NCBA, going by the fact that they're the few ones who did announce the interim dividend?
I think the answer is in your last bit of that statement.
Yes.
Boosted by the fact that NCBA declared dividends of 2 shillings when only NCBA and ABSA actually declared dividends for the half-year results.
Yes.
But for NCBA, especially now, we've seen that year-to-date, it's one of the best-performing stocks, if not the best, with a gain of 25.5%. And looking at it as a banking counter has mainly drive our markets together with Safaricom. And increased investor confidence in NCBA also stems from the fact that they are being able to improve their non-funded income, which is very key for banks, because they are not only relying on their interest income, but they are being able to fund income from other sources. And even looking at the success of avenues like Fuliza, which they're in partnership with Safaricom, and the fact that NCBA is being looked at as a digital lender and as an enabler of digital loans, which is actually driving its growth, without mentioning the fact that it's been one of the best banks in terms of forex income. So being able to diversify has been one of the greatest attributes that has been driving NCBA's performance year to date.
So when I look at the last one on that list that is worth talking about, Kenya Re. Kevin, from where you're sitting, we do know that Kenya Re is essentially the insurer for insurance companies in the country. When you see it at the top gainers list, and should you see it at any one time in the top movers list, how do you understand then? How do you put that into perspective? Is that pointing out to good business in the insurance industry, or not so much? It's just a case of Kenya Re?
For Kenya Re, looking at it, insurance business in Kenya is not the most profitable at the moment.
Yes.
If you look at the latest report from the Insurance Regulatory Commission that regulates insurance in Kenya, insurance companies have been making losses, mainly due to the high loss ratios. But for Kenya Re, it sort of gains in that environment, because as an insurer, I will want to cede more premiums to my reinsurer so that I can be covered in case my claims overrun what I'm receiving in terms of premiums.
Yes.
And now that's where Kenya Re is gaining from, because as insurance are trying to look at mitigating these loss ratios, they're also looking at in terms of trying to cede more to their reinsurers so that they can be covered adequately. And this in turn helps to drive Kenya Re's numbers in terms of what they're receiving and in being translated into the bottom line. And also the fact that also Kenya Re is also a dividend-paying stock.
Yes.
We've seen most of the insurance companies shy away from dividends, but we saw Kenya Re announce a dividend in the financial year 2021, which gives investors confidence that there's at least return in terms of dividends from that particular stock in the insurance sector.
Pretty much. Let's then cross over to the next indicator this morning in terms of how the markets really did open. And by the way, let's look at the top losers. We're going to pick a couple of counters and we're looking for the surprise package in that one. And by the way, just to talk about Sanlam, by the way, and Jubilee is coming back on that as well. I mean, Kevin, here's the thing. Is this the kind of the hot and cold performance that then we're going to expect from the insurance companies in the country, where it's not an homogeneous performance? You will find that Kenya Re is among the top gainers. You might even find it among the top movers. But then again, you see Jubilee is represented there, and Sanlam also comes in as the top losers from yesterday's trading. Is that what we are going to expect from insurance companies in the country?
I would say so, yes, because as mentioned, insurance is currently turning to be a very unprofitable business in Kenya.
Yes.
And for Sanlam, this has been aggravated by the fact that last week Fitch Ratings downgraded its outlook on Sanlam, irrespective of the fact that Sanlam has a lot of backing from the parent company in South Africa. But the downgrading of the ratings by Fitch now also shows how we are slowly losing confidence in the insurance sector in Kenya.
Yes.
And points to the fact that Kenya Re, on the other hand, is now benefiting sort of from what the rest of the other actual insurers are doing.
Yes.
Kenya Re is sort of gaining from that because these insurance companies have to look at what they are ceding back, because we are in an environment where claims are overrunning premiums. Companies are having to pay a lot in terms of claims, but what they are being able to collect in terms of premiums is very little.
Pretty much.
In fact, just to clear that up, most of the insurance companies' bottom line is being driven by investment income at the moment.
Isn't it? As opposed to the core capital.
Yes, as opposed to the core
business.
Their brick and mortar in insurance.
Yes.
Yeah.
So much talk about it, because what I'll be calling Kevin again, so we can actually even have conversations on the insurance counters at the NSA. Let's move into the last indicator, and this is what we've been seeing Safaricom rally heavily, especially after officially announcing the formal start of their operations in Ethiopia. Let's look at what were the top movers yesterday. Again, we're talking about Safaricom, 12 million. And by the way, this is really interesting then, Kevin, even as you look at it, because Safaricom is coming in with 12 million, KPLC 6 million, MBV 430,000, KCB 430,000, Equity 412,000. But for me, Kevin, I want to start on that particular stock, KPLC. Why are they back again? The day before yesterday, we saw them at 9 million. Now they're back again with 6 million. When are they going to stop? What is going on that particular stock?
KPLC is a very interesting counter, especially at the moment, seeing that its turnover for yesterday was half that of Safaricom.
Ooh, and that's huge, isn't it?
And that's huge, especially for KPLC.
Yes.
But looking at it, there's also renewed confidence that KPLC is now sort of heading in the right direction. There was a lot of focus on management. There was a lot of focus on the agreements that they are getting into, which were unprofitable for KPLC in the past. And also the fact that something that is not good for the Kenyan consumer, the fact that power bills also increased by about 15.7%.
Yes.
So in terms of revenue to KPLC, there is increased revenue on that front. But looking at it, I think it's a new dawn for the company. And the fact that even investors are looking at that stock more keenly should be a very positive pointer, and we hope that this can be sustained over a period of time.
Isn't it the million-dollar question then, Kevin, that I gotta ask you right now?
Yes.
I mean, we've seen Safaricom actually do a volume of 40 million. Was it the day after they did announce that their formal operations were already starting in Ethiopia? And since then, we've seen them do above 10 million. But the thing that we're going to talk about is the share price. We were sort of expecting they will cross the 30 shillings mark, sort of take us back to the levels for 2020, but we're heading to 43 shillings. Are they going to come back? It looks as if we were not excited by even the announcement that they'd gotten the Money Mobile license in Ethiopia.
Safaricom, year to date, Safaricom has plunged. We're looking at declines of more than 30%. But how we should look at it is in terms of its fundamentals. If we look at Safaricom's financial performance over the last 5 years, this is a solid company. This is a company with solid ratios.
Yes.
This is a company with an aggressive growth potential and a growth strategy, even going into the expansion in Ethiopia. But I think some jitters have been led by the plans by the CBK, where we're having the separation of the mobile money and the telecommunications service, which is not being well understood by the market, if we may say so. Because at the end of the day, M-Pesa will be under a holding company under the parent group, and that has led to some jitters and to some to investors sort of holding back on the stock. But in the long run, as this unfolds, going into the new year with the CBK governor announcing that we expect to see this in January, then once we cross that and investors are able to see that it's not really a big change at Safaricom, just being able to separate the business lines and allowing CBK to regulate it better in terms of the M-Pesa side. In terms of revenues, we should be seeing expected higher revenues coming in from Ethiopia, even as they formally acquire the mobile license, the mobile money transfer license. And this can only be a positive indicator of the share price returning back to the 30s and even crossing the 40s mark again.
Pretty much. I promised you, Kevin was going to come in today and put those markets into perspective, but it doesn't stop here, because then we get interesting after this tiny break. I'll be asking him the promises that we've seen from the president and the capital markets as well. 10 are going to list under Ruto's tenure, and then 5 in the next 12 months. Is there a possibility for a market that experienced the last IPO back in 2008, the last listing back in 2015? What is going to change so that we see those things in the next 12 months? Once we come back here on Lookupbusiness, join us live at Lookuptv across all your social media platforms.
Vera Beauty and Fashion College is focused on being the leading technical and vocational training institute in the region. Our team possesses in-depth knowledge and extensive experience in the industry, offering thorough training in cosmetology, hairdressing, interior design, creative arts, training of trainers, nail technology, and fashion design. With branches in Nairobi, Thika, Meru, Eldoret, and now in Mombasa, our courses ensure that learners are completely equipped with knowledge, competency, and employability skills. Enroll today to be a part of a center of excellence.
Born a man, the society bestows tough responsibilities upon you.
Lazima uwe mtu wa bidii, ukija kuoa lazima uwe ni provider.
If you're not able to provide, that's a challenge. It takes a toll on a man.
It takes someone who is strong enough to face it.
This is Born a Man.
Get a
chance to wake up as a tourist as you view Mount Kenya every day by buying a plot of land at Wema Gardens, Naru Moru. At only 400 meters off tarmac, this is the right place to build your dream home, cottages or holiday homes. You can also buy this property to give to your children as a special inheritance. Water and electricity are in the vicinity, while neighbors are already building their homes. These plots are specially ready for you with title deeds scheduled to be out in 6 months. Buy a 50 by 100 plot of land at Wema Gardens for only 399,000 Kenya shillings. You can also pay for your plot through our friendly one-year installments plan.
We're inspiring possibility.
Good to have you join us on Heart to Heart.
We bring you stories of people who, despite the pressures they experienced, still trusted God to see them through.
The seeds that was sown in me helped me navigate and overcome that period of my life.
New testimonies, new insights, and even better revelation of the good things God has in store for us.
There is always a blessing waiting for someone in every episode.
Hapa kazi tu inaendelea kuwasaka na kuwatambua wale ambao wanafanya kazi extraordinary na zile kazi za kujituma.
Biashara yote unaambiangwa, as long as you have a plan, you can do it. Our service is about kufurahisha the customer.
Mpenzi mtazamaji, hii ni hapa kazi tu.
This is Lookupbusiness. My name is Simba Kiage. Guess what? Join us online at Lookuptv across all your social media platforms. Let's now then put into perspective what the president and the capital markets announced just the other day on the NSE bell ringing ceremony. Guess what? In fact, when you looked at it, it was just symbolic, because back then when you used to ring the bell, it needed to be around 9:30. The thing is, it was symbolizing a revitalized capital markets, a change in NSE. And then they made a couple of announcements that I want to put towards Kevin Karobi, so that we can actually sort of decipher that information. Kevin, let me start with the first one. The sense that the president wants to push to us that indeed we can use the capital markets for wealth creation and development capital within the country. Going by how we're performing currently on the NSE, how far are we from that possibility?
Yes, looking at it as a capital markets enthusiasts,
yes,
we are in the right direction. Because we need, first of all, we also needed that political goodwill. Because if we look at it in terms of in the previous reign of Wih Kibaki, he was invested in the capital markets. He was looking for policies to change, trying to encourage listings. If you can remember, Safaricom listed just a few months after the 2008-2007 post-election violence, and became the most important and the strongest stock in the exchange at the moment.
Yes.
And now seeing that the president is looking at it in terms of we need to see more activity. We need to see more businesses coming to the capital markets in terms of looking for their funding. We know that the capital markets funding might be even cheaper than the bank options. It might be even more flexible than what you are getting from a bank. And this can only, now increased activity and increased political goodwill can only mean well for the bourse. Because at the moment we are not doing too well. mainly attributable to external factors, which with time probably we'll try to see a correction in them. And now an improved and a revitalized BAUS can only even attract more foreign investors. We also need to do a couple of things, such as even increase investor education, and we'll talk all this in the course of our discussion. Because we also need to see local investors participate more. We need to see more people, more companies trying to look for financing in the capital markets. And that will only help us to grow. That will only help us to increase investor confidence, increase liquidity, which has been a challenge in the current capital market structure. And looking at it, it's the right way to go, and that's how to proceed.
Pretty much. Let's then delve into the first one. The president said that he envisions a point where when people are going throughout their activities during the day, that what they're doing is trading at the NSE, Kevin. But we do know an industry that has reached that level is the betting industry in Kenya, where even as people, the so-called hustlers, keep on going by the activities, you'll find them betting, and we've seen the amount of revenues that betting companies in the country are drawing on a financial year basis. Kevin, which therefore means financial literacy has to come in. What do you envision to happen to the point where any other person outside there would actually keep on trading at the NSE as they are doing right now with the betting companies in the country?
The first thing is investor education. We really need to put out the options available for you, for an investor in terms of trading, because you'll find out that so many people don't know or associate trading with the elites. Someone will consider that I have maybe 1,000 shillings. Will consider, let me just log in onto my mobile phone, place a bet. There are so many advertisements out there.
Isn't it for betting, isn't it?
Yeah, for the betting sector. But now we need to see now that energy also for the NSE. We need to see the NSE, the CMA, giving out as much investor education as possible, telling people that you need how to buy shares is to do this, approach a broker, have brokers who have automated processes, because one of the things that the betting world has done is being able to automate processes. You can quickly log in, deposit money via M-Pesa, and start off the betting. We also need to see that process eased for the NSE. If it's on the broker side, if it's opening the CDSC account, we need to see that put into a seamless process where we can sit here with you and advise you, open an account, and within a couple of minutes you're up and running, and you can be able to trade during the day. Because if we don't invest a lot in investor education, then we are always going to see local participation lagging behind. Yet we are the ones who should be able to spur our capital markets. We shouldn't be waiting for foreign investors who are currently running off to other markets. We should be looking at it in terms of it's a challenge for us. It's a challenge for everyone. Right now the stocks are low. This is the time we should be preaching the gospel of investment.
Buy right now, because you want to actually get to
buy right now. Because if you look at all the market indicators, the market is on a low. This is the time to buy and reap in the future.
Just sorry to cut you short there, Kevin. Would have you loved it if the president would have said, this is what we're going to do from now, maybe in the next 2-3 years, is to even talk to companies like Cyton who are in this space, so we can see how we can incorporate them and empower them then to push this investor education outside here. Is that what you would have loved to see from what you're saying?
Yes, I will. I will love to see bringing all the stakeholders together and trying to have discussions and conversations on how to do it. Because as you've mentioned, looking at it even in terms of the current active players in terms of the capital markets, we have the unit trusts, for example, the Cyton Unit Trusts Fund. And these are products that have also not been well taken in the market. Because if you look at their AUM, they're only doing about 140 billion. In terms of AUM, and the potential for them is large. If you look at the pensions industry, it's doing about 1.5 trillion, which is at least doing well in terms of deposits. But if we bring all these stakeholders together, try and see in terms of regulations, what can we ease? How can we support them? How can the government be able to just to make their presence felt. Because you may look at it in terms of the unit trust funds with an AUM of 140 billion. But if you empowered them, even something that the president is trying to push in terms of savings, if you empowered those small stakeholders, you wouldn't be struggling to look at for people to save in a nation. Because if you look at the avenues that are available for one even to save currently using the unit trust funds, they are vast. But do people know about them? Not as much.
Yes.
Yeah, you will find someone will still even hold their money in cash, even when at time they don't know that they are losing their purchasing power over time. But if we really empower and put out the word out there, we'll find that someone who's holding even 1,000 shillings in their house will be able to see that I need to invest this in this product, and that will just help to spur the markets.
Pretty much. Yeah, but he spoke about a couple of things as well from what we're listening to him. He said he actually put to task the Privatization Commission. Now, leaving that aside, because he pushed those gentlemen and told them he was going to tell them why, he was going to ask them why they're paying them, because what was the last company that we saw getting privatized? I mean, you call it maybe one or two for maybe in a span of 10 years. Yeah. Then he said that for him, under his tenure, he's going to see that majority of top-performing government companies now, state agencies, they're going to get privatized and then later on boarded onto the NSE. From what you're saying, is that enough, Kevin, to then draw investment onto the NSE? Is that enough? Like, what would you, more counters? Does it essentially mean more investment, really?
I wouldn't say that more counters mean more investment, because if you look at it, even one of the impediments to companies listing was liquidity. Because if you looked at even the market turnover, except Safaricom and KPLC, which did over 1 million, which we've just looked at, the rest were lagging behind. Even large counters like Equity were only doing 400,000 in terms of turnover in a day. So there is still an aspect of liquidity that cannot be solved by just incorporating more counters. We need first to make sure that the processes are right, that we are being able to attract as much investors as possible, because liquidity can only come from investors. Liquidity can only come from me and you actually investing in the market more. Because when you do that, we'll see that there's more interest in the companies, and as liquidity increases in the markets, as we are seeing more people transacting, then it will make sense to have more counters. But also looking at it in terms of, we had a list of 26 companies ready to be privatized as early, that list was produced in the 2012, 2011.
Way back, isn't it?
Way back. Yeah. And those who are what we can call successful were the likes of Kengen at that time, and was able to get out of that list, and now is a counter in the NSE. But most of them fell flat. For about 10 years, there was little talk about privatization, yet some of these state-owned enterprises were still accruing debt that is guaranteed by the state. And they're one of the reasons why also our debt is skyrocketing, because some of them were, even companies went to debt like KPLC, borrowing, but this debt is guaranteed by the state. Some of this borrowing is even in USD dollar denominated, which is very expensive right now to service. So it's a step in the right direction, because we need also to ease the pressures on the government, to allow the government to do what it's required to do on a day-to-day basis. Let these companies go into the open space. Let them be forced, for example, in terms of even disclosures, in terms of being able to track their performances. Let them go to a space where we can be able to ask questions. We can be able to demand for financials and accurate financials after a period of time, so that we can put the people who are supposed to run them to task, not just having agencies that are hiding behind the state, yet they are making our country down.
Something important that he noticed also on that particular day is that if indeed you have been a company, either private or state-owned, and you've been making a couple of things here and there, we are ready to come sit, forget whatever it is that you've been doing, so that we can actually get to onboard you onto the NSE. Which sort of made me think, is the listing law in the country, or the privatization law in the country, sort of, is it so is it so heavy to the point that when majority of the companies look at it, they're like, that's not something that we need to go into?
Yes, indeed. If you look at it in terms of, especially for the private companies that want to list, some of the disclosures are heavy, some of the requirements are heavy, such as the minimum share capital of 50 million. So, in looking at it, we have to acknowledge that we are a country where most of our businesses are the micro and small medium enterprises.
Yes.
So when they look at it in terms of, I need a share capital of 50 million just to be able to list, then they share away. And also in terms of, we also love the family-run businesses that really don't want to cede their control to the don't want to lose their voting control.
Yes.
So they want to remain in that cocoon where they can make their own decisions here and there. They really don't want to come to the main sector, and that's just some of the things, and we can look at how to ease some of those processes that to assure them that they are not really losing control of their company. They're just even being able to even raise funds for expansion.
Yes, which begged another question then, and we did say that phrase again from the president the other day when he was saying that if the law does not serve us, then we repeal it or we change it. And if we can change it, then we repeal it.
Yes.
If there's a man who is very passionate then, Kevin, about having the NSE as a development capital drive within the country, and we have big companies within the Kenyan economy that are not even thinking about listing. Case in point, Coca-Cola, the Bidco. Do you think we're going to get to a point where it's going to say, well, I mean, for you to really operate in this economy, you got to be on the NSE, like we've seen other markets too, that when you are a company with a certain capital base, then you got to be on the main market?
Yes, I think we should be looking at it in terms of just easing the space and being able to make it as efficient as possible.
Would you like to think that Coca-Cola might not look at it and then say, we don't need to list in Kenya? Because then if it's a company that would go throughout all those all those requirements, it's Coca-Cola, it's the likes of Bidco.
Yes.
Is that they have an option, Kevin? Is that what it is?
Yeah, currently, because if you look at it, currently the capital markets are playing second fiddle to the banking sector. So as long as we are pushing the capital markets to sort of a second option where a company knows if I need, for example, to raise money for my operations, can simply walk into Equity, have a chat with Dr. James Mwangi there, and he'll avail the funds that I need for my development.
Yes.
But now we need to come to a point where a company looks at, can I float a corporate bond? How can I be able to tap into the capital markets? Can I be able to list and raise funds for this expansion? If it's Coca-Cola trying to rethink its business model, we have to reach to a point where capital markets are what we are looking at looking at first. Because if we look at advanced economies, banks only provide about 40% of capital to businesses. But for us, banks are doing 99%. Capital markets and everyone else is doing just a very paltry 1%.
Yes.
So there needs to be a lot of energy to grow our capital markets, because at the other side, we cannot really put in laws that might cap these companies and tell them that if you reach your revenues to this point, then you won't list, because they won't disclose, because they are not at liberty.
Isn't it?
They're not liberty to disclose their financials.
So it's about making the capital markets attractive to them.
It's about making the process efficient, making the markets efficient, being able to include as many investors as possible so as to attract liquidity. And the thing is, if these companies look to the capital market, there will be a lot of interest. If you look at even the likes of Safaricom, KCB, successful companies that were privatized, the IPOs were oversubscribed by more than 400%, showing that investors will love to. It's only that the situation around it is not as rosy and as cozy. But if you look at even EABL, where they floated a corporate bond in the course of last year, I think, and it was also oversubscribed, meaning that investors will be ready. If we provide a good holistic environment for these companies, they'll tap into the capital markets, and investors will be looking at how they can also participate in those processes.
Pretty much. Yeah. The other announcement, again, I know you guys at the company also looked at those two particular companies that the president did say that they are at the final stage of receiving the authorization then, or the green light to be at the NSE. I'm talking about Credit Bank and Bio Yogurt. Kevin, going by how the banking quarters have been performing at the NSE, we do know that they've been the strongest, and the manufacturing quarters as well. Now we're going to see another addition to the likes of EABL. Do you anticipate that these two counters that are coming in, these two stocks, that are coming in, are going to I don't know what to put this question, to diversify the NSE? And what do we anticipate from them, going by how similar counters have been performing?
And looking at it in terms of the banking sector for Credit Bank, it enters the market at a point where banking sector is very important to the growth of this market.
Yes.
And the beauty and one of the things that I as an analyst love about banking is the fact that a bank will have to produce its financials every 3 months. It's very easy for an investor to track the performance of these banking stocks.
Yes.
Then in terms of regulation, we are looking at the CBK is very apt and very quick to look at banks' performance. So that's a sector in our market that is very strong and that is preferred by investors a lot. Controls about 24% of our market currently. So the entry of Credit Bank, it's advantageous because it also provides options for one to invest in the banking sector, and it's a welcome addition. And even if you look at it from the side of Credit Bank, it's an advantage for them to be joining into a sector that is known and that is preferred by investors. So we would expect when they reach that point that there will be a lot of energy, there will be a lot of investor-driven interest in that stock.
Yes.
And in the case of Bio Yogurt, looking at it even in our manufacturing space currently, for a country that deals and thrives on agriculture, it's what we can call funny to say that we do not have a dairy company in the BAUS at the moment. So the entry of Bio Yogurt should increase also and even turn more eyes into other companies such as the KCCs, yes, which also is listed also, for yes, privatization. Yeah. And also the manufacturing sector is a sector that has a lot of interest from the investors. If you look at the the EABLs, the BATs falling into the same sector, now the owners will be on Bio Yogurt to continue its financial performance to ensure, because for that stock to thrive, they have to be a dividend-paying stock in the manufacturing sector, and they'll have to catch up with that as soon as possible. But it can only serve as a good indicator, because again, it gives one options to look at it in terms of if I really think that, for example, the policies that we are seeing the government trying to put in place, trying to ease input costs for dairy farming, and you have a stock on the other side that is now doing the output on the other side. Yes. As an investor, I can look at it in terms of within a couple of years, then this is a stock that will be able to have lower production costs and at the same time continue to increase its revenues, yes, and boost its bottom line.
Pretty much. Just as we're clear, there's the last question that I'm going to ask you, Kevin, yeah, and you have 45 seconds then to respond to this one.
Yeah.
And we'll talk to you about it. Even on the back of this new look capital markets that we're trying to come up with, this week as well, there's something going on in the capital markets. The CEO, NSE, and the chairman, NSE, wants to petition TMA to introduce indefinite tenures for those two gentlemen. What do you make of that? Because they're supposed to get out of office next year, March? Yeah?
Yes,
yeah,
yes, in March 2023.
Yes, in 45 seconds.
Yeah. First, I would like just to look at it in terms of, in the last 8 years, no listing. South Africa last year, South Africa had 16 listings.
Whoa.
Raised $4.2 billion dollars in their IPOs. I wish it's the CEO of the Johannesburg Stock Exchange asking for a renewal chapter.
Yes.
Because for 8 years, I think it's a period enough for you to be able to put in your strategies, be able to come up with policies, be able to have a vibrant capital markets and a vibrant NSC. But you cannot just look at it in terms of extend your limits
indefinitely,
to another 8 years indefinitely.
Yeah, actually indefinite.
Yeah, 8 years should be sufficient
Yes.
enough for anyone to get their policies up and running.
Yes. Guess what? They spoke to the president on the sidelines and they said, well, during our tenure, we've introduced the derivatives market. We've also seen onboarding of companies into the emerging market segments and all that. But we wait. Kevin, thank you very much for coming by.
And thank you
Always
for having
lovely
me
to have
later.
you around. Yeah. All right. Now, ask Kevin, from Side On Investments, really going through what he thinks about what the president did talk about the other day. We're calling it the new look capital markets because if we are going to see Credit Bank and Biog at least any time from now, we're still waiting for that announcement from NSC, and 5 more companies within the next 1 year. They did announce in the next 12 months, we're going to see 5 more and 10 more from the government side. That's new look capital markets. Is spoken about all those, taken back to the time that he came to the studio right here at Lookuptv, across all your social media platforms. And I am at Kiage Simba. That is it. I will see you tomorrow. Let's talk about financial literacy tomorrow then, shall we? All right.